since I have a black screen, it's time to go. TGIF, everyone. Just downloaded some new Zoom software. Okay. Everyone doing okay? Hope you had a good week. Let me coach you. Don't try and make your week on a Friday. Write it down. Right, Brock? Don't come into Friday and going, well, God, the week is almost over. I have to find something to do. I need to make some pips. Okay? It's all in your head. So now's probably the time you do some book squaring. You know, take home maybe a little bit. You know, I'm not against taking home something over the weekend. In fact, I can't relax unless I have something to worry about. Maybe you're like that too. But this is when I kind of start taking a look ahead to next week after taking in what happened this week. And I'm looking at the euro here, and although it's trying to turn a little bit here on the daily, to me it looks like, you know, I thought about what Blake was saying, and that, you know, 105, you know, starting to look more like a possibility here. And this is what's interesting to me on the daily, is that, you know, this was 1 and this is 2. So just something that I'm looking ahead to. Doesn't mean that it's going to happen, but when we start trading under 106, 105.80-ish, I'm going to be paying attention for a reversal. That's about it in euro. Okay, so gold had a good week. There's the daily, can't say, you know, it's done anything wrong. In fact, you know, after last week's reversal, look at what it's retraced. Almost looks like it wants another high. I just will say this, that if we get up to this line, this megaphone line, and we make a new high, on the daily, I don't believe we'll confirm. Okay, so we've been diverging, and this might be the second RSI divergence, and this could be the third. This would be the really, this is the first, but I try not to count them until we start getting under 70. But you know what really tipped you off, like I talked about early in the week, and this is why I follow things like the gold silver ratio. I really don't trade it, but you know, I use it for giving me my preferred longs and shorts in metals. So we came into this week, you know, we're trading down here, and to me it looked like we could rally back up towards, you know, 116 to 120, that would, you know, we get some type of failing rally here. A lot of people are thinking we're going to be a blow up, but you know how that helped me? Because my attempts, and I did attempt both, silver shorts worked a few times, right? You know, it worked a few times. It worked from here to here. And, you know, gold's about to press new highs for the move, and, you know, we're not even over this week's highs. So, you know, there were a couple of shorts in silver. So until XAU, XAU gets up there, then gold becomes a preferred short. Maybe it's next week. And S&Ps, all I could say is indecisive. I know, you know, my bias is to short this recovery rally, and, you know, you had a nice recovery up here. You know, we didn't quite achieve the 61.8, and on the weekly, if we don't fall apart today, it's not giving you a 2-week reversal. And then I look above up here, like, you know, the fib is still there. A lot of people probably afraid to go home long over the weekend. I'm not sure, but this is an inside week, which the most bearish thing it would could do is take out this week's high early next week, and then take out this week's low, or a bullish thing could be take out this week's low and then start closing above this high. And then you know what? Then you have 2940, even 3100. Okay. What level at today's close counts as a 2-week reversal? Okay, you just count back 2 candles. It held it this week, 27.89.30. Got them. Okay. So Blake, TGIF partner, we're getting a nice response for our summit.
Hey, buddy, how's it going?
Hey, bro, good.
Well, we should, and I'd say that because we have really a great lineup of speakers, so it's that's really not too surprising to me. But
okay.
and plus you got so many people that are trading from home right now. So it's like I said, it's not a huge surprise, but I think everybody, if you haven't signed up for the Trader Summit, you should definitely do so, especially this weekend. So what's going on there, Coach?
I tell people, Blake, don't try and make your week on Fridays. What do you think?
I heard you say that when you first started, and I couldn't echo that sentiment more. I try to make a certain amount every day.
Yeah.
I have a goal that I set for myself every day. And believe me, there are days that I don't even come close because I'm obviously negative. So that means
the guys I knew on the floor, Blake, they had daily monetary goals too. And then
I mean, we have daily monetary goals, but I always look at Fridays as the same way you do. It's like if I make money on Friday, I'm happy about it, and I'm not there trying to make up my week on a Friday. I actually had a good week after a couple of weeks. The last couple of weeks, and I can just talk about the whole month actually. As of right now, I've had a very up and down month. It's been a struggle for me specifically because it's been hard to pinpoint why the dollar's moving, and that's going to be one of the it's actually going to be my topic next week regarding the Trader Summit is the drivers of the dollar and why it seems so confusing as of right now. But
because I'll be there and I'm confused.
And I think most people are. And if you think about, I have this chart up in the euro, and you have to go back maybe 2 weeks to this webinar and go back to the recordings and listen to what I had to say regarding the euro dollar. If you don't recall, my original look for the euro was this, right? I'll just put it up there. It was this. And let me fill that with like a different color like that. Okay. So my original view of the euro was this. I'm like, okay, sell off, bounce, but I had an alternate of what we're seeing right now. And if you remember when we broke through this support over here, I'm like, the opposite of that may happen where we get this, and look at where we're at and where we stopped.
Hey, you know what? Yeah, Andre lost his accent. Sounds like an American now. Andre.
Yeah.
Oh, Blake. Oh, yeah. Go ahead, buddy.
No, but I mean, I was looking at these Gartleys, but the reason why I argued like it could go either way is because I have arguments for both sides of the dollar. Now, when you look at like the euro, and you wonder why it's lower, that shouldn't be too surprising because of, you just look at like the Eurogroup meeting. I mean, they just can't agree to a solution or a fiscal union, if you will, and that's really been the driver that's been pushing the euro lower. I mean, you look at the U.S. response to COVID-19. We're on our 4th or 5th tranche of stimulus already, and the eurozone's everybody's flailing around, not knowing exactly what to do, and no one can agree. And so that doesn't surprise me that the euro is so weak. And then you've got big Eurozone political leaders talking about, hey, we might have to do the unthinkable and leave the Eurozone. So, it's no surprise to me that the Euro's lower. I'm actually, what's more surprising to me is the Euro's not lower, like, trading down at 104 or even parity right now. I'm more surprised about that than anything. So looking at the Euro, you can see why it's so choppy. And just if you think about since the mid February, the moves that we've seen, and nothing's been clean. I mean, if you're trying to make sense of the euro dollar from a basic technical standpoint, trying to find some clean moves here, it's just not happening. And so to see the euro bounce right now is not too surprising. To see if we can close below 108, which, by the way, we poked our head just above 108 just moments ago on this little squeeze. We poked our head right above 108, but as long as we close, actually it's like 108.20, 108.15. As long as we close below that, I think the risk for the euro is still lower. But it's choppy, and the read is very difficult. I mentioned this on the Daily Roundup webinar yesterday. I'm not going to name who it is. Some guy who used to be part of a bigger FX outfit online. I must have ruffled his feathers because I'm like, hey, the euro's going to squeeze, and I was talking about intraday, how the euro squeezed higher. If you don't recall, if you were following me via Twitter, you saw what I was talking about. And I played the euro actually on the long side yesterday, but I knew it was going to squeeze, and we had a false breakdown. And this one gentleman who I do follow, he's like, wow, you're not looking at it a longer term, a long enough term view. And I'm like, huh? What are you talking about? And the reason why I say that is because, as I mentioned on the daily roundup yesterday, I'm like, how I trade the market is how I trade the market. You can point out that my view is wrong, but you don't know what my view is, and you don't know how I'm skinning this cat. So no one has a right, and I don't for you either at home. I have no right to tell you what's wrong and what's right and how you should trade the market. The way I trade the market's how I trade the market. And so you can't tell me that I'm doing things wrong because I make my living in the market. So, and frankly, you got squeezed. Yeah, but I ended up ruffling somebody's feathers yesterday, and and it's fine. Once we got the squeeze over with, we slumped again. I wasn't surprised when the euro slumped because I knew that Eurogroup meeting was going on. But trading it right now, it is choppy, and you've got to be very much on guard here when you're dealing with the euro dollar. You got to just kind of you got to just, I mean, it is what it is, and I mean, I could say overall I'm very bearish the euro overall, but that doesn't mean that I'm bearish the euro on an intraday basis, and that doesn't mean that I'm going to stay short for the next 3 weeks either. There's different ways definitely different ways to trade the market. And in this case, the euro is probably the path of least resistance is lower right now, but it's definitely not going straight down, right? That's for sure. All right. So here's the cable. Cable's just kind of very choppy, very tough to read. Oh, going back to the euro, one of the other reasons why I was leaning more bearish towards the euro yesterday at first, but I knew everybody was short, is because we had every euro pair breaking lower, but then they look like they were all they're all false breakdowns, all of them. Whether you're talking about yesterday, the euro Aussie and the euro pound, and they all squeezed, and that was another thing that I had was identifying too. Now, Going back to what's happening in the rest of the market. So the cable's not doing a whole lot. It's very messy at the moment. The Aussie, frustratingly, and I say frustratingly, it is, just uh, keeping its poise around the 64 cent level, and it shouldn't be too much of a surprise because the equity markets here are are holding up as well. So I mean, if you look, hello. Oh, sorry. There's somebody from my office. I thought Stelios or Steve were saying something. But if you see the S&P is not too far from its 618 retracement, either is the Aussie 618 retracement. We're very close. So I would venture to say, and I don't think I'm going too far off of a limb here to say that what happens in the S&P right here, and when I say what happens in the S&P, meaning if we break higher or we break lower, is probably, oh wait, that's the Aussie. Damn it. Okay, so I'm going to just draw the same thing over here. So if whatever happens in the S&P, if it goes higher or if it goes lower, the same thing's going to happen in the Aussie. It's basically the same trade. You guys can see it. It's the exact same trade. So if you really want to know what to do with the Aussie, or you really want to know what to do with the S&P, just watch them both. I mean, I think it's pretty obvious at this point. Now, I am a bear on the Aussie dollar while we're below the 618 retracement, right? While we're below the 618 retracement, which is also a confluence of a 78% retracement. Just as I'm a bear in the S&P while we're below the 618 retracement here, which comes in, 29.32, right? Doesn't mean that we can't go higher, because I think whether the S&P goes higher or not probably has more to do with science rather than anything else. You can look at technicals and say, well, it's going up because of this or going down because of this. You honestly, me too, we don't know what's going to happen with the whole virus thing. I think the market has pretty much found a neutral zone based on the information we have right now. Where we go from here probably has more to do with testing, the virus, death rates, and then economic data. Because I'm waiting for the market to come to the realization, now that we've bounced back, come to the realization that, okay, we've bounced back, but how is the economy going to be impacted moving forward based on this shock that we've just felt for the last 2-3 months moving forward? Because even if the data improves, I'm wondering if the market's going to be responsive to that, because we've already priced it. We've already priced in that the curves are going to flatten and things are going to improve. So now, how do businesses improve? How quickly do people come back? You can open up America or the rest of the world as much as you want, but how many people are actually going to go back to restaurants? How many people are going to go back to the movie theaters? How many people are going to go back to work?
Have you been on a
These are
freeway?
questions that I think are
Blake.
still.
Blake, have you been on a
Yeah.
freeway?
Huh?
Have you been on a freeway in the last several days?
Oh yeah. I mean, I bike over our freeway because my home is close, very close to freeway access. So
Traffic is kind of back to normal here in California
really
already.
Wow,
Yeah, it's disappointing because I mean we're not even at that date. So the weather's turned nice, and people are stir crazy, and
yeah, I think that's a lot of it,
going
right?
out.
It's the whole, I mean, I talked to it's interesting that you say this. I talked to my best friend yesterday, one of the guys that I grew up with. We went in the military together. We've we spent my 21st birthday in Japan together. Seen him in Africa. It's like one of my closest friends. We hadn't spoken in a couple of weeks, which is odd. Usually we speak, several times a week, even though he lives on the other side of town. It's just, we know we're not going to see each other. Usually we get together for lunch or a beer or something. Anyway, I was talking to him yesterday, and he was very frustrated. Now, his wife owns a daycare, actually 2 daycares. They had to shut down one of them temporarily, hopefully. And then, and his business and her business are greatly affected by, what's going on. And I could hear his frustration in his, he's like, he's taken the route of, because he's a healthy triathlete guy. He's like, and being in Arizona, we're not as affected as obviously New York and places like that. But he's just like, hey, if I want to get out and get back to work, it's my own prerogative. If I get sick, it's my own prerogative. He's at that point, and I think his frustrations, which I can voice my opinion if I want, but the way he feels is the way he feels. But I think it's very reflective of how a lot of people feel. It's like, okay, this is, we've seen the worst of it. Let's get back to doing what we do. Whether you think it's a good idea or not, you listening at home, and I'm not going to voice my opinion here, but that is his voice. And it's interesting to hear that, because I think that's pretty representative of a lot of people, right?
Yeah. Yeah.
Like you notice that there's more people on the roads. I mean, more people driving around.
It's not all for essential services. That's all I can say. Yeah.
No, and you're gonna have that happen, and I think that's human nature, and especially in places that are less hard hit. And yeah, I agree. The reason why that
we would have to use the National Guard in this country to really have a lockdown.
Yeah, I would agree with that as well. And so,
yeah,
what the ramifications are moving forward is we'll see. But anyway,
we'll see this fall.
Yeah. Hey, one of the other things I want to talk about before Steve and Stelios get here is that I'm a little frustrated because I shorted the dollar Swiss right at 98 cents overnight. I closed it at 97.62 this morning, and I took some money out of it, and I'm like, yeah, that's awesome. I did well. And if you don't know why I took that trade, it was my chart of the day yesterday, which is free, guys. Just talk about, if that's the case, 98 cent level maybe offer a good risk reward for long Swiss, short dollar Swiss pair in the coming sessions. So, I put an order out overnight. I got
Blake,
hit.
Since you're at the blog, we also have another blog post that went out yesterday.
Yeah, I'm not finished talking what I'm talking about though, Steve.
Okay.
So anyway, I shorted.
Steve, behave yourself.
Oh yeah.
I shorted it here, and then I closed it, and I obviously closed it a little too early. I had my stops at break even. I'm like, you know what? It's Friday. I'm going to take profits off the table. But that's how I played it. But that's, it's obviously frustrating. I want Steve. I'll go back and talk about the blog. The reason why I want to talk this out is because, I want people to understand, I'm not perfect by any stretch of the means. When I get into trades, I get out early sometimes. I get antsy. I take it off, and like you can see, this is really where I got out, is right about there. Because I'm like, oh, false breakdown, I'll just take it off the table, bounced a little bit, and then all of a sudden the wheels came off the bus. So, but anyway, that is a blog. Now, as Steve so rudely interrupted me, just joking, Steve, we do have a blog on oil, and this was put together. I'll let you guys go read it yourself, but several members of our team have joined in to deliver this blog post to you. So you guys go read it when you get an opportunity. Matter of fact, Steve, I didn't even see you guys tweet it out yesterday.
We did, I think. Yeah.
You did?
ForexAnalytix did, I mean.
Okay. Well, that's what I'm saying. ForexAnalytix did. I didn't even see it, and but then again, I wasn't looking really hard. Sometimes because of trading, I mean, Twitter takes up less than 3 or 4% of my time, so I probably missed it because there's so many tweets going around regarding the online trading event. And by the way, if you guys have not signed up for the Trader Summit, I want to put this in the chat box for you. So here it is. It's in the chat box. If you guys haven't signed up, please do so this weekend. Remember, it's free. And then do us a favor when you see us tweet about it, tweet it to your followers, because everybody should be able to see this event. It's great. It's free, and we've got a lot of great speakers. The best lineup I've seen for an online trader summit or conference yet. So make sure you guys have signed up if you haven't done so already, and make sure you put in your correct emails, because you need to do that to get your link, your registration, your access link. You can't put in some random email. You got to put in a valid one. Okay. So anyway,
help us break a record for the most registrants ever at an online event on April 29th and 30th.
Yeah, let's shatter those records. Anyway, Steve, how you doing this morning?
Oh, now you
good. It's
good.
Nice that it's Friday finally. Yeah.
Yeah. Does that make any difference to you?
Not during the past 1.5 months, but hopefully soon it will.
Yeah, I know you've been working your butt off putting together this trading event, which, by the way, yourself and the rest of the team, like Joe and have done, just in Stelios have done a great job putting it all together. Hats off to you guys. It's going to be a great event. I got to work on my presentation this weekend. I hate PowerPoint, but we've got some good content for you guys, I think. Anyway, yeah, so that's it. It's Friday. I'm not going to be too active today, as Coach pointed out. Today is not a day where you want to be trying to make up for if you had a bad week. It's not this is not the day that you want to try to make up for that. I'm just trying to get away with my numbers in the black versus in the red on a Friday. That's always it makes me feel better, especially going into the weekend. If I go into the weekend on a positive note, I feel better going into next week, believe it or not. And when I lose money on a Friday, it sours my whole weekend, and I'm irritated, and and I beat my kids, and it's horrible. So and
your wife
and my wife and
kick the dogs.
Yeah, kick the dogs as I walk around the house. Anyway. So I guess we have durable goods orders coming up here in a moment. So yeah. I'm going to turn it over to you guys. I thank you all for all of your support. I hope you have a wonderful weekend, and make sure you sign up for the Trader Summit. And Steve, Stelios, I'm going to pass it over to you guys.
Have a good weekend, Blake.
And thank you, Coach. You do the same.
Okay,
Blake, you mentioned before something we've been talking about with Stelios, explaining to everybody that the economy can't return back to normal immediately. There were some polls they ran, which were very interesting, actually, asking people like, okay, when all the social distancing measures, etc., are lifted, do you intend to go to the movie theaters? Do you intend to go to a restaurant? Do you intend to go? There were like 4 or 5 questions, and on average, the answers were roughly 80% no.
Wow. Is this for the U.S.?
Yeah.
That doesn't surprise me. And
me too, yeah.
One last comment before this news comes out. Goldman Sachs says we do not expect the FOMC to raise the Fed funds rate until the economy is roughly at full employment and 2% inflation. We have therefore pushed back our forecast for the first rate hike to late 2023.
To late 2023, yeah, that makes sense.
There you go.
2023, yeah.
I'll take the over if I might.
Okay, numbers. Let's see.
Oh, minus 14.4.
Nothing to see here. Move along.
Yeah, I mean, yeah. And we're talking, this is a percentage, by the way. It's not like an index that moves from a plus 100, let's say, to minus 100. So it's a minus 14.4%. Okay.
Yep.
Yeah.
Well, you know what? The numbers have been poor, and we probably continue to be poor. But the U.S. Treasury Secretary Mnuchin, I can never say this name right, but Mnuchin says he actually thinks the economy is going to be reopening within the next month or two, and sees a strong rebound in the third and fourth quarter. That's very interesting. So basically, he thinks we're going to be back to normal within 2 quarters.
It depends, Telio. I would agree with him if he means, for example, that second quarter is going to be something like minus 30%. Then yes, third and fourth quarter might be a strong rebound, but it's not going to be good. You know what I mean?
Yeah.
There'll be some pent-up demand that could help for a little while. Don't you think?
Yeah, but depends on the sector. Because, for example, as we said, specifically in many of the service sectors, I don't think that there is going to be some pent-up demand that's going to immediately, blow
because
out.
people are afraid of getting sick. They're not.
Yeah,
gonna,
exactly. So I
they're
think
not
that
going to take vacations or
yeah,
anything.
for several sectors, I think that the
I'm going to.
recovery.
Yeah.
For several sectors, I think that the recovery is going to be slow and grinding. That's what I believe.
Yeah.
Do I believe that third and fourth quarter are probably going to be a lot better than the second quarter? Yeah, absolutely.
After all this money being thrown at it, sure.
Not only that, but we're talking about probably
comparatively speaking, basically.
Yeah, comparatively speaking, because we're talking about probably the worst quarter, probably
Since
the history. I'm not even sure that the 30s, coach, don't forget that the 30s didn't get some kind of a destructive trigger that immediately shut down the economy over a day, you know what I mean? So I don't even think that during the 30s there was a quarter like the one we're going to get now.
Okay.
So
just kind of reminded me of my childhood.
You mean your adolescence?
Yeah. Rub it in, man.
Your childhood was a lot earlier than that.
Yeah. So
love Teddy Roosevelt.
So let's go over a few numbers that we had this morning. UK retail sales, worst reading in history. I think worst drop in history, minus 5.1% month on month. Worse than expected. Norway Q1 GDP minus 1.5%. Actually, not a terrible reading compared to others that we're gonna get. German IFO business climate 74.3. This is an index from 0 to 100, right? Or no? What's the index? I can't remember actually now. No, it goes above 100 as well. But anyway,
it does go above 100.
Yeah, it does go above 100. Yes, but again, the lowest reading in, well, I don't know, ever, or very, lowest reading in many years. So the numbers continue to be abysmal, and we now wait to see with the timing of the opening of various economies. Like even here in Greece, we're going to be apparently opening up second week of May, slowly, and see what the effects are. I'm still hesitant in terms of the rate of growth again back to some kind of normality. Maybe it's just me, but I just think
yes, especially for economies. We had a friend yesterday asking about Spain, which is a very similar situation to ours, Stelio. He was asking like, what about the tourist season? And they was like, forget about it. I mean, we're going to be lucky if it's like 20% of normal activity.
Yeah, in countries like that, or like Greece as well, we depend on tourism massively. So that's going to be a big hit. Well, at least we have a good Minister of Tourism here, who's my friend.
I know.
Otherwise, so what else happened? Actually, it's been very quiet otherwise. And, we're waiting to see what's going to happen with equities today. And remember, the positioning is still pretty short, although it's reducing slowly. So I wouldn't be surprised if we see. I wrote this first thing in the chat room this morning when the S&Ps were down like 0.5%. I said I won't be surprised if we see a rally into close of the week, and well, we're getting it slowly. I still think we're going considerably lower in equities. That's what I think. We get one more leg lower, and then we go to new all-time highs. But we might squeeze a little bit more. 2850, 2900 in the S&P is doable, and then I think we go lower. Other than that, oil has been surprisingly quiet. It's still fluctuating intraday, but compared to the last week, it's doing nothing. And currency is also very, very quiet today. So really, I think we can call it.
It seems like last week it was Monday. It went minus 38.
Yeah.
So,
yeah. That's
yeah.
true.
So I heard a guy talking about that. That what happened in crude oil might be instructive for that it could happen to other things. That everyone thinks zero is it, and that other instruments could go negative.
I would be very skeptical because how many other instruments do we know that, first of all, demand has literally more than cut in half in an extremely short period of time, while supply hasn't really been disrupted. And at the same time, you need so much space to store a low dollar amount of it. So how many items that actually tick all those boxes you can think of?
I was going to say
none.
Yeah, the thing that really sets oil apart from everything else is the high storage costs. Yeah,
yes.
And the fact that physically it's bulky. It's it's not a gold bar.
Because
that's a great point.
Yeah, just to show the significance of storage issue, let's make the following assumption. You had a shrinking machine in which you managed to store, let's say, $100,000 of barrel, 100,000 barrels of oil in a room.
Yeah.
Would you have any type of hesitation to fill that room up and wait?
Yeah, true.
I mean, would you have any type of hesitation that in the not so distant future, crude is going to be trading above that price, so you can actually sell it back to the market for a profit? Yeah. Absolutely none, right?
Yeah, good point.
So it's all about how easy it is to store, nothing else. That's why, for example, when somebody asked the other day about gold, I was like,
the other way.
Look the other way. Yeah. Because in a small vault, like a small home vault, you can store a huge dollar amount of gold, right?
Yeah.
We have a question.
What's your combination?
3, 6,
left one.
666. Yeah. We have a friend who's asking what happens.
6969.
We have a friend who's asking what happens when you are short, say, from $20 oil and it goes negative. Do you still make money? Well, if you're shorted the future, which is tradable, and brokers will, even if during volatile times, they still allow you to reduce positions. Yes, you buy it back at wherever, and you lock in the money, right?
They got paid on that negative move.
Oh yeah, absolutely, absolutely, they did. And if you saw, started the day before yesterday, if I'm not mistaken, they now have a CME also offers negative options for crude. So you now have multiple ways through which you can benefit by negative oil prices if you want to be short. So it's not just by futures; it's also by options.
Yeah. And also, our friend says sellers of the barrel are forced to pay to sell it. Actually, it doesn't actually work that way. I think a tiny percentage of all these futures actually get carried to delivery. So what happens is basically they get settled at wherever, and they take a loss, or they roll it to the next contract, which means you take another loss as it rolls down to wherever spot is.
Which with this type of contango, to roll it to the next contract, you have to take a huge loss. I mean, in this situation, you had to take a massive loss.
Yes, absolutely. Other than that, it's been very quiet and just waiting for the weekend, really. I think the whole market is.
Yeah, I mean, the market has really been doing very little. A lot of people are surprised with this rebound in risk assets. Initially, I did think as well that we might be breaking down, but then, as I mentioned it yesterday, again, seeing how the price action has been developing in anything that is risk correlated, it has started looking more and more likely to me that we might have another leg to the upside before we can actually see it roll over. Having said that, is it impossible that we're not going to see a higher high before we actually accelerate lower? No, it isn't. I mean, for example, looking at the S&P, we're still below this broken wedges trend line support. So, I mean, it's not impossible to accelerate lower from here. So that is a likelihood. Looking at the DAX, we see that we are out of this ascending channel, but at the same time, we're holding within a rectangle. So one way or another, whichever direction this little rectangle breaks, let's have a look at it on the 4-hour chart. Here it is. Whichever direction this rectangle breaks, we should see, there we go, an extension at least equal to the height of the rectangle. Is it to the upside? Then to the upside. By the way, if that happens to the upside, then we see that in essence, the rectangle's target more or less brings us to a retest of the 61.8 of the all-time high to the lows. So, either can happen. I think that the best strategy here is playing the breakout. So, for example, in the DAX, that you have this rectangle, we break below the support, you short it and look for 9,500, we break above the resistance, you go long and you're looking for 11,500, more or less. That's what I think is the best way to trade this at the moment. Now, no need to add more into what I said yesterday about the Aussie and the Kiwi. I mean, I still see the likelihood that this is another type of a pennant consolidation. So we might see another push to the upside before we see lower prices. And of course, those will go together. I mean, if we see indices break higher for one more push, then Aussie and the Kiwi are going to be doing the exact same thing here. If we saw them actually accelerating the downside, then it means that the Aussie and the Kiwi have already posted their high. So, you need to be a little bit agile. You can't really trade with fundamentals here because fundamentally speaking, and I've said that multiple times before, in the vast majority of the cases, in the vast majority of the indices, we are trading at the highest valuations we ever had in history on occasion, because we might not be at all-time highs, but with the huge downgrade in expected earnings, the PE ratio has actually managed to shoot to new highs despite being decently lower from the all-time highs, which means that fundamentally speaking, and still being within an environment that the vast majority of economies have either completely halted or anyhow more or less running at minimum capacity, you would expect much lower prices. But on the other hand, we have trillions and trillions and trillions of dollars being thrown in the market with main purpose to support asset prices. Okay, so there's no question about it. Once again, we have huge amounts of inflation still manifesting mostly on asset prices. But as we've said in the past, I do believe that sooner rather than later, in this case, that now they've gone completely overboard, it's going to spill over from asset prices that it was mostly confined during the past business cycle to the rest of the prices as well. Now, it's not that I don't believe that inflation was affecting the rest of the prices as well, because comparatively speaking, under normal circumstances, with technology developing as fast as it is, with methods of production improving by the year, etc., we should be in an almost constant period of deflation, which is a good thing, I have to repeat. But instead of having deflation, we have positive inflation, and probably a lot higher than the CPI can capture the way they measure CPI. So it's not that inflation wasn't spilling over to consumer goods as well. It was. But I think it's going to go overboard within the next few months to few years, because it takes some time to, to transition. Now, having said that, if we briefly go to the, let's say, to the most popular of the FX market pairs, yeah, we are seeing a rebound here in the euro. We are seeing stabilization in the cable. We are seeing the DXY finding resistance at the previous high here. What do I think is going to happen here? First of all, I couldn't care less in the short term, because to me, this is a game of, this is a type of game I don't want to play. We're clearly seeing a very choppy environment in the popular dollar pairs, and I don't want to participate in that. I'd rather trade something else. Having said that, I'm still of the opinion that most likely the next move for the dollar is going to be higher before it finally starts moving decisively lower. So we might remain longer in this consolidation. So I wouldn't be surprised if, let's delete all that. I wouldn't be surprised if we see something like this, right? Which means that might be, a larger period of consolidation here until we actually cross through, the previous swing high and low, meaning, let's say 98.80 to the downside, and let's say roughly 101 to the upside. I really have no reason why I would want to participate in either of those markets, right? I mean, at least I'm not a scalper, so, definitely not my type of trading here. If you look at the USD Yen, the situation is, very, very similar. Look at this. Actually, USD Yen, just look at the last 5-6 trading days. I mean, it's like somebody has completely unplugged this market. So, look elsewhere. That's the only thing I have to say. Cable has been a little bit more active. So, we saw a nice rejection and a decent move to the downside. So I think that the cable looks, like a better short at the moment, because look at the last 3 candlesticks. Those are daily candlesticks, right? Look at those last 3 daily candlesticks. I mean, so far this looks like a stabilization, not even, you can't even call it a rebound. I mean, we're still confined in the vicinity of the candlestick. We saw what was this? Tuesday. So, especially cable, I think looks a lot better, to be short than anything else. So basically my advice, stay away from those until they actually, become tradable again. Shouldn't take that long, but no reason to push your luck until then. Now, having to do with some other commodity currencies, for example, let's have a look at the USD CAD. Right, USD CAD has broken out from this. You want to see it as a flag, fine. Alternative interpretation, there you go. Let me remove the magnet. Alternative interpretation, there you go. You want to see it as a pennant, here it is. Doesn't really matter how you want to look at it. We've broken out, right? So we are pulling back, but as long as we trade above 138, I really don't see any reason why you would want to be in the short side of this. As simple as that. USD NOK, I have to say that between USD NOK and USD CAD, USD NOK looks a lot more likely that it's going to continue lower than USD CAD to me. You can see the big difference in the way they've traded, right? First of all, this was an explosive move higher and an explosive blow off top. That's how it looks to me. Second of all, look at the massive divergence between what, for example, crude has been doing and what it has been doing. Not to add the main factor, which is that the Norwegian kroner is, a much more solid currency, much more solid economy. Speaking of which, I haven't done that in a long time, but it's not a bad idea to have a look what's happening here with the CAD NOK. As you see, no real surprise if you really zoom out. The CAD NOK is, moving in a in a big range, but we are in essence breaking down from this range, which means that perhaps it's time that the CAD NOK really produced some downside move. You can see it here, right? Yeah, so that's an interesting point of view. I wouldn't really be trading, as I've said in the past, when we're talking, for example, about Aussie Kiwi, I wouldn't that easily be trading two currencies, with similar characteristics against each other. If you do so, you usually need to use more leverage than usually because they tend to not move that much. But I do think that perhaps, NOK CAD to the downside is a decent long-term opportunity if you're patient. Here is also USD SEK, by the way, since we haven't had a look at it in quite some time. This might be a triangle that's breaking out, although I don't really like momentum here, so you don't really know what's happening. I mean, the technical formation might be something like this, right? So we might have a bigger, longer period of like consolidating there, but this also looks somewhat like the USD CAD, that it might actually produce a higher high in the interim. While about USD NOK, I'm not that certain. I mean, it looks to me that there is a chance we've already found a high there. Anyhow, let me go through some of your questions and have a look at them. So, hi Steve, could you have a look at the Euro Yen? Yeah, absolutely. We did have a look at the Euro Yen, if I remember right, earlier in the week. And specifically, I had mentioned the significance of the 116 area. You can see why that's the case. If I zoom out, here's the daily chart. So once again, we are stalling in this 116 area. So we're unable to push through. So what can I say? As long as this area is holding, a rebound is likely, and definitely the risk-reward ratio is only in your favor if you're trying to be long. Now, I'm not saying that being long is the right direction. There is no question. The Euro Yen remains very heavy. There's no question about it. But from a risk-reward perspective, I mean, I can see where you would place your stop loss if you want to be long. But if you wanted to be short, unless you have a very, very optimistic downside target, there is no real risk reward for you to actually trade this. So that's the situation here. I mean, we're testing again and again this support, and we're unable to break through it. So as long as that's the case, you have to be quite careful because we might see at least a temporary rebound towards, this channel or this horizontal support resistance area, or at least the previous high here at 118.70. Let's call it. So that's what I think about it. More questions. Italian stock index and silver. Yeah, absolutely. So let me start from silver. Here it is. If you remember, I said yesterday that, listen, what looked initially like a breakdown probably is just a consolidation, and we seem to be breaking above it. So I think that silver looks good, similarly to what we saw in so many of the tickets we already examined. For another push higher, the obvious first target would be the confluence of the 61.8% fib and this horizontal support resistance area at $16 before we can talk about, a deeper pullback. So that's what I think about it. And, gold closed yesterday at 7-year highs. I'm talking about the daily close, right? Because intraday we had moved lower 14th of April, but daily close yesterday was the highest we had in 7+ years. So, can't really fade this yet, right? I mean, as I've said, I see many divergences. I think that this market can really end up within the next few weeks, taking out all the weak long positions, people that jumped in this rally very late, people that were dismissive of the bullish implications of gold when we were breaking through 1360. Why was 1360 important? You can see it here, right? So people that were dismissive of that bullish move ended up, many of them, jumping on this rally very, very late. Examples like a few days ago, 3-4 days ago, Bank of America came out with a $3,000 target in a period of 18 months. Do I believe it's a stupid target? No, I don't. I do believe that gold can be at 3,000 in 18 months from now. The question, though, is, will it go to $3,000 straight from here in 18 months? No, I don't think so. I think that the market is probably going to shake off, the weak hands first before it can more easily move to the upside. So, I'm obviously still long gold, through owning physical, but, would I be buying here spot gold in the short term? No, I wouldn't. I want to see, a bigger correction lower, and then I'm probably also going to buy it, in the market. But until then,
could I interest you in taking a few barrels of oil off my hands for little precious metals? Because I'm telling you, I have all this black stuff all over. I can't get it off me carrying these barrels around. I have oil all over.
Your garden and your swimming pool are full of it, right?
Yeah. Oh gosh. Yeah. It's hard to swim in. Too much.
Yeah. How many
viscosity.
barrels of oil does your swimming pool hold?
A quart. Anyway, so what do you think, Steve? Call it a week?
No, not yet. We have more questions.
Okay.
You slacker.
I have the worst work ethic of anyone on the team. Don't you think?
No, I don't. And here's the Italian stock index that our friend wanted to have a look at. Yeah, it is what it is, and it isn't looking pretty. Look at where it got rejected, by the way.
Yeah.
And yes, this whole move higher is definitely corrective in nature, right? You can see it. Slow overlapping, just go back to 2011. Like, look at this move. I mean, this had nothing impulsive to it. As, in my opinion, this rebound has nothing impulsive to it either. Now, doesn't mean that this rebound is over, but it means that one way or another, in my opinion, either from here or from a little bit higher, now or in a few weeks, this thing is crashing lower. This was an impulsive move. I mean, as clean as they get, right? You can count 5 waves down. I mean, without even having to zoom in smaller time frames. And needless to say that this recovery has all the characteristics of a move that you would consider corrective. It's rather slow in comparison to the move lower. It's very overlapping. It's very choppy. So in my opinion, it's bound to fail sooner or later, probably sooner. Okay. Needless to say that I've talked about it many, many times. I love Italy. I love Italians. But in my opinion, Italy is in big, big, big trouble. And it's got bad days coming ahead. Probably the most troubled of the European economies at the moment. Not the one with the worst potential, but the most troubled for sure. And for the friend that is asking about...
plenty this year. First it was Venice flooding, and then how, what happened with the coronavirus.
The foundation of Italian problems date many years back.
To the Roman Empire.
Not that much back. I didn't mean that, but at least a couple of decades back.
Okay.
And here's the IBEX, similar situation. This rebound is definitely corrective, so be very careful. Okay. Here's the DAX. Here's the FTSE. You can see more or less similar patterns here, right? Here is an ETF of the Euro stocks. I think a corrective rebound here as well. Decently stronger than many of the indices you've seen, but in my opinion, I find almost no way to view this as the beginning of an impulsive move higher. I think 80% chance this gets resolved to the downside. Steve, do you agree? Oil rally appears to be over, so all things now pointing to risk off. Reaction to earnings, investor sentiment, and positioning no longer oversold. Economic data dire. Europe unresolved. Stronger dollar. No vaccine therapeutics in sight. Reopening economy still way off. Expect stronger move lower to commence imminently. Talking about S&P. I would agree with most of what you said. I'm not exactly sure about your definition of imminently. So if you mean like necessarily 2 to 3 days, no, not necessarily. I mean, would I be very surprised if it took 2 to 3 weeks? No, I wouldn't be very surprised. But if you mean in the grand scheme of things imminently, yeah, absolutely, I'm with you there. All things pointing to risk of yes, so it's not going to happen, says Dominic. Yeah, that's one of the things I always keep in mind, what Dominic says, in believing that it might not be so imminently, because the market, I mean, the pain trade for this market remains to the upside. That's the main factor that kept me going with being long the S&P for that long, because everyday comments of people here were like, I think it's turning lower, shouldn't you take profits? And I was like, no, because, you know, I thought mainly the pain trade is to the upside, right? And that is why, even though I reversed at 28.55, I reversed by initially Italy. Wait, I have on the wires from Live Squawk. Okay, so news from Italy just came through. Italy looking for 55 billion euros of extra deficit for the year, and is assuming that its yearly deficit is going to hit 10.4%. So that just came through the wires as I was speaking. So, you know, put that in context, right? And keep in mind that it's the most indebted European nation after Greece, with a huge difference though. Greece's debt as a total amount is still, you know, a blip on the map. I mean, it's big as a percentage to GDP, but Greece is a small country, like 10.8 million people, while Italy is roughly has an outstanding debt of 2.5 trillion. So you understand that no matter what the situation with Greece is, it's easily fixable because the total amount is, you know, very little for European standards, while 2.5 trillion that Italy has is a totally different story. Yeah, but what I just read, it just came through from officials. I mean, that was an official statement from the government, Gautam. So not an assessment anymore, but the official, you know,
request.
Yeah, the official request and official assessment from government lips. So in essence, you know, confirms 100% what was already speculated. Possible worldwide debt jubilees. Yeah, I mean, you know, essentially we're getting there. When holding FX positions for a longer time trade, i.e. many weeks, months or years, what is the best, cheapest way of doing this? Futures or CFDs? Spot, you mean? I mean, there's no why CFDs on, I mean, you have spot in FX, right? You know, I've really found, I mean, for the funds, we've had like forwards, you know, very frequently we've had positions through forwards. But, you know, personally, on a personal level, I've never found any reason to not just trade spot if we're talking about FX. For me, FX is spot, right? I mean, yeah, can you do options? Yeah, of course you can. Are there futures for some of the FX pairs? Yeah, of course there are. Can you do forwards? Yeah, of course you can. But is there any good reason why you shouldn't just trade spot in FX? In my opinion, not really. So, you know, I can talk, and I've used many instruments to trade other, you know, markets, but FX, you know, if it's my choice, I only do spot. More questions. Ozicad. Okay. Ozicad, Euro Aussie. Okay, I'm going to go fast through the next few questions so we can call it a day because coach is tired. And I'm not joking. I'm not really messing around with him. I mean, keep in mind that Paulie, Blake, and Dale actually wake up in the middle of the night so they can do these webinars for us guys. Literally in the middle of the night. I have no idea how they do it. So Ozicad still recovering within this channel. I'm not very enthusiastic. I mean, very nice rebound so far, but I have to tell you, I'm not very enthusiastic for the upside, right? We're approaching some key areas of resistance. Momentum is definitely waning without hitting overbought. So I would be quite careful here, especially if we break through this channel. I think with that, we might see a bigger pullback. And as I was saying before, I'm not very enthusiastic about trading currencies that have similar characteristics. I know that Aussie and CAD, the Australian and the Canadian economy are not that similar, but they're not that different in many aspects as well. So, you know, I don't really know why you're so enthusiastic about trading it. As I said, momentum seems to have really stalled. If we break through this channel, I would be looking for a pullback towards 86.80. And in any case, I think that 90.60 to 91 is a strong area of resistance, so you should be careful there. Euro half. Okay, that's a rare request. Probably haven't had a look at this chart in who knows how long. This might be a blow off top, but it might also be like a bigger consolidation. So I wouldn't be surprised if there is one more high, but in general, I think that this is another of those pairs that sooner rather than later is going to be a very, very nice short opportunity. Might already be the case because this looks like it can produce a nice head and shoulders formation. You can see it here. But in order for that to be a head and shoulders formation, you definitely need to see a breakdown from there. Otherwise, until that happens, this can just be a triangle getting results to the upside for one, probably last move to the upside. Okay. Crude. Yeah, let's have a look at crude, and I think we can call it a day then. Yeah.
Okay.
So,
before you call it a day, with who's still here, if you promise to join, become a subscriber, I have an end of the week potential top pick for you, a position trade to show before we go. Who's interested? Give me a why. You should join anyway. This is just one trade, but I want to give you a little incentive. Pretty classic. We've mentioned it here before. Okay, there's a few said they will, Steve. So, okay. All right. Pull up the daily Mexican peso.
I already have it up because that was what I was looking to talk about first. You see it?
Okay, well then you don't have to join. But anyway, that to me it looks like we're going to have that third drive, Steve.
Maybe you see, week. You remember how long ago we drew this?
Yeah. Sometimes when I see it too like that, it's kind of like looking at a person that has, you know, that's just not complete. I mean, the pattern's just not complete. And they do complete this way. But for the most part, I think that's going to be a potentially nice top pick. And it's coming out of a wave 4 triangle. It'll be doing that too. Wow.
Another interesting trade here that looks rather similar because we had a friend asking for it is USD INR. I still think that USD INR can produce another leg higher.
Yeah.
Before lower, and last but not least, and then we're
So
going to
these
call
are
it
the
a week.
exotics that we were talking about for a while, Steve. So
Yeah.
what's happening here is we're going to get one more gasp, one more blast of strength in the dollar that takes these, emerging economy or submerging economy currencies up to new highs, which for them are new lows. And that may be the pivotal place that when these tertiary currencies turn, that a big dollar turn is coming.
Absolutely. And as I've told you, one of the best for me, besides the Noki, if we're talking about developing economies, and I'm going to have a look at it immediately after crude. So crude so far, a decent rebound percentage-wise. This is the continuous, by the way. So don't get confused if you don't see the prices totally agree with a future contract, June's future contract, for example. But I'd rather plot technical analysis on the continuous because it doesn't have the gaps. So we've broken through this formation, and only if we go above that formation, I'm going to start feeling more comfortable that we found the low. Needless to say, though, I do believe that we're very, very close time-wise in finding a low here. And there is definitely, in my opinion, no risk reward in being short, not because you can't make money being short. I mean, the same thing we saw happening in the March contract, in the May contract, sorry, might happen again in the June contract. It might, yeah. But I do think that the next big move to the for crude is going to be to the upside. So, that's why I think you should be, looking to take advantage of that. And USD ruble, I've talked about that before. Russian economy cut rates today from 6% to 5.5%. I mean, it's a joke. I know that many of us living in developed countries, developed democracies, you don't envy being in Russia. Big percentage of the population is more or less in poverty. There's no question about it. But if you look at the finances of the government, of the country, it's what healthy economies looked like when developed economies had healthy economies. 17% debt to GDP, 5.5% central bank rate, cut from 6% today. And I do think that the next big move for the USD ruble is to the downside. Now, prior to that, I wouldn't be surprised to see one more high. But I do think that being short the USD ruble following that is going to be an amazing long-term trade. One that is going to likely be paying you more than 5% yearly to hold it. And, for how many things can you say that? Okay, coach, do what you do best.
If you're worried and you can't sleep, just count your blessings instead of sheep, and you'll fall asleep counting your blessings. See everyone Monday. See you on top of the summit. I'm going to bring my big cane like Moses. All right, I'll be there. I'm the host. All right, everyone. Steve, have a good weekend, buddy.
You do, and everybody else.
All right,
Enjoy.
Warriors. Adios. See you Monday.